I think the first co-GP is just, is just understanding, what it takes. I think that was, one of the big learning opportunities, not just in terms of like underwriting the deal and knowing all of the different levers that you need to be looking at, but it's also like capital raising on a deal, and being able to make sure that you're positioning the opportunity to the right investor.
Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Capital. Today we're joined with Rashmi. Rashmi is the founder and CEO of Aarcstone Capital Partners. I'm sorry, Aarcstone. I'm
It's
gonna
Aarcstone.
Aarcstone. Got it. Sorry, I
Yeah.
apologize. Capital
Yeah.
Partners has 25 years of human capital and tech experience, and is a co-GP on 2 syndications, holds 438 multifamily units, is dedicated to youth financial literacy. We appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, no, absolutely. Thanks again for having me. My name is Rashmi. I am the founder of, Aarcstone Capital Partners. I actually started Aarcstone. We're a real estate investment company, and really focus on value add multifamily assets. What I've realized is, I partner with strong like operators who are established, and collaborate with them. That's how I started off with, like my journey, and, work with savvy investors, really sort of harnessing like the benefits that real estate has. Aarcstone really has like 2 main, mission. We obviously provide like excellent returns, for our investors, and really look at improving communities, that we're invested in. So
So,
yeah, originally
Aarcstone,
from India. Yeah,
well, let's talk about how you got started in real estate in general. Let's go all the way
yeah.
back to the beginning. What made you want to get involved in real estate, and then into bigger commercial real estate?
Sure, sure. Yeah. I was going to say I originally, came from South India about 25 years ago. I joined my husband here. And really, my real estate journey didn't start until much later. I did the sort of 9 to 5 corporate, rat race, as, many would call it. I obviously had a very demanding, job at Amazon. And realized that I needed to make a transition when he was moving from middle school to high school. It kind of really came to a realization how time just is flying. And, I needed to sort of explore what other options were available. While it was, obviously a super hard decision, like I think I had to make that sort of bold move with much hesitation. But obviously grateful for the experience, just being in corporate, and like the experience that I gained, and the network that I built. Obviously super grateful, like I said. But I think it was time for me to really hone in on being sort of there for my family, and being there as a mom. So that's kind of really what was one of the biggest sort of mindset shifts that I had to make. Obviously then I had to figure out what that would mean. I started doing consulting, which gave me a little bit more flexibility. But I had done real estate. Obviously, like in all honesty, I'd grown up with real estate. My dad was in real estate back in India. He had done a lot of a lot of the, I want to say under 20 units, multifamily, ground up construction. So I, you know, obviously had experience with, just growing up with, hearing the value that real estate had, and, how it sort of influenced my dad. And, like I had seen that involvement from him. That actually, gave me a little bit more um, sort of, I want to say push to being able to do something here in the US in real estate. So that's kind of where it all sort of started. And, I started sort of doubling down on, trying to acquire real estate, more as an active, investor versus I had done some LP deals before. But started to look at that, on an active, level, and did single family and did short term rental. Obviously was super passionate about it, but I also wanted to scale, and that's when I started to explore, like the commercial multifamily, like real estate.
Got it. Did you join a mastermind or get into
I
a
did.
room that pushed you? Okay. And then that got you in the room,
Yeah.
started educating yourself and learning the lingo. And tell us about that.
Absolutely. Yeah, no, absolutely. I think, the where my journey started was, I'd started to, explore investing in Hartford, in Connecticut, and looked at that a little bit more closely. And not for I didn't even know what market research was at that time, right? It was really like, okay, well, this is a market that I could go buy and operate, and that's kind of where it all started. And I put two LOIs, which didn't go through. But in the process, it taught me so much, because I not only built like a network of like lenders. I understood what Fannie Mae like agency sort of lending was when it comes to commercial multifamily. And obviously, like people asked, like I remember one of the lenders asked me to send, them my schedule of real estate, which I didn't even know what that meant at that time. So it was just a sort of, along the way uncovering that I needed a little bit more. So that's when I started to hone in and, study and learn about it a little bit more. And, I want to say about 3 or 4 months later is when I got into a mastermind, and the journey has since then been, just with the people that I've met, the networks and the connections that I've had, it's catapulted my overall sort of experience, and where I am today.
Would you say you would be where you're at today without the mastermind?
Where I am today, maybe 5 years from now. I
Yeah.
think the mastermind definitely helped with, getting me the right connections, building the network, and, like just, putting me in a room with the right people in the same mindset, kind of also.
Yeah, for sure. And it just it buys you time. It speeds up the process and just getting in the energy. Um, so in that
Yeah.
mastermind in the group, did that was that where you discovered being a co-GP and being able to take down bigger deals together and finding your value through those channels?
Absolutely. I think that's what, that's really where, like I understood that, well, there are other ways. You got to partner, you got to build your network. And, it's really when you're looking at being able to, make that transition from single family to, multifamily, you can't do it alone. You're going to have to build out a team and, be able to work with other partners, who are in this space and who have more experience. And especially, in this case, because I was going outside of my comfort zone and not just investing my own money, but I was now looking at, bringing in investor capital, to deals. Probably one of the most uncomfortable things, for a newbie to do, and especially for someone, like me or who I am. For me, it's really important, to own that, right? Like, and be sort of that, having that stewardship of, someone else's, money. I think, in the beginning was, really uncomfortable. But, once I realized and honed in on, well, listen, I invest, alongside, investors on deals that I participate in as a co-GP, I think, also brought me sort of, a lot more confidence, because, I'm not just there, you know, as an asset manager or as an investor relations, but I'm there in it also as an LP alongside, investors.
Yeah, that's huge. That's an alignment of interest. It shows that you're in it just as much as they are, and you believe in a deal, for
Yeah.
sure. So, for the listeners, what is a co-GP? What is that? What does the structure of a syndication look like?
Yeah. I mean, essentially, a syndication, just like, any sort of, I suppose, private equity. And for those, who understand that, there's obviously, as operators, as general partners, we find the deal. We basically will source and, operate the deal. We will go, reach out to our family and friends, or extended pool of accredited investors as well, to bring them in on a deal as a limited partner, where they're really just essentially not really having voting rights, or really not responsible for day to day, which is the beauty of it, right? Like, you actually have your, now you're not getting those calls with tenants, or you're not dealing with all of that. And for those listeners who have done single family, for them, they'll probably relate to, they're not getting those midnight calls, from their tenants. Here, as general partners, we work with property management companies that do that, from a day-to-day standpoint. We're responsible for executing the plan that we've outlined when we source the deal, and we provide that sort of value to the deal, and bring in the investors, who essentially will come in and invest their money, and depending on what it is that they want, right? Like, whether it's cash flow that they're looking for, or they're looking for equity multiple. Um, it really just depends on understanding what it is, and providing them that opportunity, so they're able to come in, in the syndication.
Yeah. What do you all look for in a deal?
For us, so the way again, like I said, I started off, fairly recently. There are operators in this, multifamily space, who have a wealth of sort of experience. So what we do is really work with partners in specific areas. And like, I'm partnered with, a group out in, basically they invest in the Sunbelt area. And I also have a group that invests primarily in the Northeast. And so that's essentially what I do. And they obviously follow a different model in both of these. One is obviously a very tenant friendly state, but that's also, there is a benefit to it, because in the tenant friendly state, we actually have a lot of subsidies that we actually leverage. And because of that, we are able to guarantee sort of rents. And we also have, like, year over year increases just from the subsidy program. And a lot of the subsidies going to manage the tenants that they're putting in. And the eviction process. So from an operator standpoint, it actually is easier on the wallet, when you're not spending on evictions and so on, which can, as many of them know who are in the space, can be expensive. Um, Not to mention, just the economic vacancy, right? Like, meaning that you're not collecting rents. There are people living there, but you're not collecting rents, and you don't want to deal with that. In terms of, like, the business model, it really is, buying these assets, in emerging markets, repositioning them, and, like, improving, like, operations. The Sun Belt obviously is, um, right now we go through several deals before we're able to get to one that, we submit an LOI on, or that we're in on.
Got it. What would be, or what are some of the biggest challenges that you face during your first co-GP project?
Um, well, I think the first co-GP is just, is just understanding, what it takes. I think that was, one of the big learning opportunities, not just in terms of like underwriting the deal and knowing all of the different levers that you need to be looking at, but it's also like capital raising on a deal, and being able to make sure that you're positioning the opportunity to the right investors, and and it aligns to what they're looking for. I think those were some of the challenges
Beliefs as we continue to
that
vet
I had to
some
deal
shut
with.
it down. Sorry. I
No.
had to shut down my phone there. It was acting up. But no, getting the experience is the biggest piece to it all. If you go out there, take action, take action, take action, then you get
Yeah.
there through incremental steps.
Yeah.
If you go back and just learn and not take action on what you're learning, then that's where
Yeah.
you just you don't push the line any further. What
Yeah.
How big do you want to get your portfolio? How big do you want to expand your horizon with operators?
Yeah, I think my immediate well, just to go back, like a year back, right? I think it was for me to be in on at least two deals as a GP or a co-GP. And I think we're at that mark right now, and I'm actually coming in. We're actually raising for another deal that we underwrote, uh, which is coming up. And in the next 5 years, I want to be, or more like in the next year from now, I want to be able to be a sponsor on a deal, which is really what I am, which is the next goal, before the 5 year plan kicks in. But yeah.
Well, you're building out your SREO, so that's huge. That's what they
Yeah.
look for qualifying, especially Freddie Mac, and then experience. Just getting the management piece. Are you all are definitely third party, because you all plug in your GP team, asset management, and then you're leveraging your third party property management.
Yeah.
Um, Very cool. How how many units are you seeing yourself in the next 5 years having under management?
Yeah. Well, I don't know if I should say, units necessarily, as much as, maybe, 500,000 under management. And it really just depends on, where we end up investing in the end. Like right now, I'm, obviously far from it, with, it being like under 500, from a count standpoint. But yeah.
500. That's still almost that's around $50 million worth of assets under management, give or take, right? So
Yeah.
that's I mean that's a feat in itself. So you go from rookie to getting in the room, learning the industry, to co-sponsoring with the GP, learning the asset management, underwriting deals, finding deals, submitting LOIs, winning the LOI, and then taking it to the closing table. What are
Yeah.
some nuggets that you can give away to listeners that are still trying to connect the dots, figure out how the process works and where to go?
Yeah. I think the two things, as I reflect back on my journey, is, like taking action and building sort of your discipline to take action. I think that's just been sort of powerful. Obviously you want to be in a room with like-minded people, who so obviously build out your network. And when they say your net worth is your network, they're not kidding about it. I kind of used to um, like not take it so seriously, until I'm, in this space and I truly understand what that means. It's, it has put me in, those rooms that help me propel and scale. So, that's one thing that I would, I mean, it doesn't have to be a specific mentorship. It doesn't have to be a paid mentorship. But find a mentor, find
Yeah,
someone who's done it. That kind of helps. I don't know. Are
even
you
like
hearing?
local RIA or meetup.
Yeah, yeah,
Yeah, either or. Very cool.
yeah.
Uh, very good. If you could pick two books, which two books would you go back and read first?
Yeah, I would do, like I'm no different than some of the others. I've done the traditional, Rich Dad Poor Dad by, Robert Kiyosaki, and obviously, that just changed my whole sort of mindset on money, right? I had read it way, way back in my early days. I want to say early 20s. But I don't think I understood sort of the concept as much, or maybe I didn't quite, implement it in the same way as I did, a few years ago. That obviously changed it, or almost reinforced, what he's talking about there in terms of, looking at your assets and liabilities, in that sense that he explains. So obviously super powerful. Outside of that, I think what really sort of changed um, uh, my sort of habits and discipline is, Atomic Habits by, James Clear.
Oh, yeah.
That book is, like, I mean, for those who have, read it will, relate, but those who have not, you definitely need to be able to go and get your hands on it, and, and read it. It really changed, and it's incremental change, right? It's small changes, but it compounds, and I think, that's the power. That's where the power is, at least.
Yeah, yeah, it's the small things. Like there's not one big event. It's everything that leads up to it. So
Yeah.
everyone sees success when success is being seen. But they don't see all of the years and effort and energy it takes to go into that it took to get there.
Yeah.
Atomic Habits is huge. I need to reread that book.
And I say that also, and in some of the actions that I've taken, from that, just reading that, and, obviously, is as part of the, mastermind, the program that I was a part of. I ended up implementing, something which was 100 days to 100 doors challenge. And it was really just taking daily steps in being able to learn, but it's taking action.
Yeah.
It's the little things that, compound. And at the end of the 100 days, we had two LOIs accepted, by the end of the 100 days. So, it definitely, there's power to that.
Oh, there is, and then and you'll figure it out as the next move as it comes. You don't have a problem until you have a problem, and
Yeah,
if you're going in the right direction, you're creating new problems to figure it out. So that
right.
works.
For sure.
Very cool. Definitely appreciate your time today. If somebody wants to reach out and learn more about yourself, possibly invest alongside of you, how can they reach out?
Yeah. They could reach me on my website is Aarcstone Capital Partners. It's AARCSTONE .com. You could also reach out to me on LinkedIn. Um, it's my first name, last name. I don't think there's another Rashmi Chanduraj. So, find me.
Very good. Definitely appreciate your time, and we will be talking soon. I appreciate it.
Yeah.
Thank
Thank you
you.
again for having me. It was great.
All right. Thanks.